Welcome, my name is Levi, I'm a full-time Forex trader and I am the author of the international selling book Investment Economics and Risk. As a trader, have you ever wondered why so many times the market will come down, hit your stop loss and shoot up to where you thought it was going to go? It happens time and time again, and in this video I'm going to explain why it happens. I'm going to show you some recent examples of it happening, and I'm going to give you a new strategy to use that will turn this to your advantage when trading.
This chart is a very good example of how the Forex market works. It basically shows how this is a zero-sum game, and it also shows the capital flows in this market. Now, it's very important to realise that someone's losses will fund other people's winnings. Money is just transferred from people on the wrong side of the market to people on the right side of the market, and this isn't really a fair game, because if you look at the Caterpillar Group, everyone is feeding off of the Caterpillar Group for a reason, because they want the Caterpillar Group on the wrong side of the market. And when it comes to stop loss hunting, this is where this is most noticeable, and I want to show you some interesting things that happened this very week on two different Forex currency pairs. This is a very zoomed out version of the Great British Pound against the Aussie Dollar hourly chart, and I've zoomed out because I want to show you how well defined this support line is. You can see that the market breached this support line. This happened this week and I was watching this market. I didn't get long because I wasn't happy getting long underneath this trend line because the immediate trend is down. But can you see how the market started to close below? It spent a few hours below the trend line, which, do you know what would have happened? It would have given the signal that this market was going to break down. A lot of traders probably would have sold this market down here only to see it go up here. The other thing is, if you are long this market, a good place to put your stop loss would be below this trend line. Would you agree? You wouldn't want to put it too tight because sometimes things like this happen. You can make allowances for that. The market can get below and close above and then up it goes. So you'd probably want to put your stop losses probably down here, I would say. The market broke down into an area. It's quite obvious that the market has moved down enough below the trend line to signal to some breakout traders that this is now ready to sell. If you are long, you would start to worry because the market looks like it's falling down and you want to cut your losses. So this is an area where longs will be liquidating. There will be a lot of stop losses. There'll be a lot of selling here. I believe again that some institution wanted to put in a massive buy where everyone else was selling. And you can see that because look at that momentum. Look at that candle. It's very frustrating for an individual trader because you see this and you think, right, this trade is not going to work. The market is going down. I need to get out. I need to liquidate my long. At that time, you see the market do this and you think, I've just been schooled. It's basically all about liquidity. If a big institution wants to make a massive buy at this trend line or just above support, it can't because everyone else is buying. There's not enough sellers to soak up their order. Therefore, the market I'd say it gets manipulated. The market gets down here into an order where lots of people are forced out of their positions. All the longs starts becoming sellers. They sell to the big bank, the order gets filled, wallop, up we go.
The reason why markets come down to areas where you put your stop loss and then shoot up higher is all to do with liquidity. In the Forex market, you and I can buy and sell at any price. Any price we can buy and we can sell. If you are a massive institution dealing with hundreds of millions, you can't buy when everyone else is buying at support lines. There has to be enough willing sellers for your order to be absorbed. Therefore, you have two options. Either you buy when everyone else is taking profits, which an institution wouldn't do, or you buy in areas where other people are taking their losses. And this means that you put in massive buy orders below support lines because it's quite obvious where traders, retail traders and professional traders have their stop losses. If the market comes down to a support line, it should bounce and go higher. If the market breaks through, this is an area of stop losses. Therefore, if you are massive, if you need a big order to be put through, you need massive selling in order for you to have your buy put in and then the market go up in your favor. So you would put a buy order underneath this support line, because the market breaks through, lots of small traders start selling, you get breakout traders starting to go short, massive area of selling underneath support lines. Therefore, what they do is they put their buy orders underneath the support line. There's enough liquidity under there, the market goes up because there's just been a massive buy. That is why so many times you get stopped out of very good positions, because you've put your stop loss in an area of liquidity.
This is the New Zealand dollar against the US dollar. It's the hourly chart, and this happened several days ago. This market was in a short-term uptrend, and the price action that you can see is actually at a weekly resistance. So I wanted to sell this market, and basically I want to show you two things. If you was long at this point, you probably would put your stop loss below the trend line. So you'd put your stop loss here, the market moves up, makes a new low, higher high, you'd probably move your stop loss to just below this trend line. Market came down, probably wiped out a lot of long stop losses, and then shot up, absolutely spiked. Look at that up movement. If you was long this market, you probably would have had your stop loss in this area. Next, the market was making higher highs, higher lows, and at this time it pretty much trended sideways very briefly, put in a head and shoulders. Market breached that, back tested this trend line, and I wanted to start selling when you had closes below this uptrend line. The market closed below, back tested and failed. That would have been a very good, this would have been a very good area to enter short, because you would, if you was paying attention to this market, which I was at the time, you notice that this uptrend line is breached, this support is breached, and we failed to get back above it. So I entered short the market around this time. My stop losses were above this line, because if the market's going to now be in a downtrend, it will make lower lows, lower highs, lower lows, lower highs. It should never get up here unless there is a trend reversal. What happened was there was a speech in the Federal Reserve. Now this market, I'd started to bring my stop loss down because I noticed this downtrend line, and I thought if the market reverses, then I want to lock in any profits. This was my limit. Funnily enough, this line here was my limit, and look where the market went. Unfortunately, this candle was flat going into the Federal Reserve speech, and then this move happened within seconds, literally maybe 20 seconds, and then it came down and dumped, and look at the sell-off. This would have been an area of stop losses. I think a big institution had a massive sell order up here, knowing that they could get liquidity, because there would have been a lot of forced buys in this area. All the shorts, or a lot of shorts, would have had stop losses here, which means if they sold the market here, they would buy it back here if their stop was activated. This would have been a massive area of buying, enough for a big institution to get their liquidity that they need to sell. And
so how do you deal with this situation? We're aware that if we put our stop loss in a strategic place, then other people are doing the same thing, and it's an area of massive liquidity which the institutions will be preying on. I would say there's not much you can do as far as your stop losses. You don't want to move them even lower, because you'll get away with it until you don't. Because if the market trend changes, it will go against you a lot before you get your stop hit, and there'll be a massive loss, and you have to keep your losses very small. What I do is, if I'm in a market, I've seen so many times in the night the market making lower lows, and in the night it will break above the previous high into an area where it makes sense to put stop losses, and then it will dump. So what I will do is I will look to see where the previous high is. The market comes down, hits a high, goes lower. Normally people will put their stop loss here. What I do is I put a sell order. If I know that the banks and the big institutions are looking for areas of liquidity where people will put their stop loss, I put a sell order there. Because if they're selling there, I want to be selling there as well. It's almost a situation where you say to yourself, well, if I can't beat them, I'm going to join them. Consider this. Look at a chart. If you want to buy, think, where would I put my stop loss if I was already long? Identify where you'd put your stop loss, which would probably be below a previous low, and then put a buy order. I've had it a few times where the market's come down, literally tagged my buy order and shot up. They are very good trades when you catch them. You have to be patient because a lot of the time it doesn't work, and make sure you cancel your orders at the end of the day, because you don't want to leave that order going and then weeks later the trend actually changes and you get filled. So make sure that you cancel the order, but always think to yourself when you're looking at an hourly chart or whatever chart, where would be a good place to put my stop loss, because that is probably where there are some big buy or sell orders.